Hello, this is James Smith from GannAnalysis.net. Here's my website. Visit, register, you get a couple of free reports. And if you like this video, give us a like and follow us on social media. XRT, that's what we're looking at today. So it's the retail sector ETF. Now, if we start from this low of March 2020 and we anchor from the high 104.31 in November of 2021. That was just 3 years ago. And then you can see there's some symmetry here because, 156 months from this low to this high, and then a lower high just 3 years later or 36 months later. I like it. It's a nice setup, especially given the fact that you're finding resistance at a 1/8, one of the Gann retracements. Now note, from the high and the low, you can count 8 horizontal lines. That means we divide the swing into 8 equal increments. So what we would call from the high would say a 1/8, 2/8 retracement here at 84.80. Today it's trading down at 82 area. I think it's starting to move down. I could be wrong. But the reason I suspect this might be a lower high relates to the time aspect, 36 months. Remember, anniversaries of former highs and lows can vibrate into the future. There's a certain synchronicity to the markets. They remember anniversaries. That's what Gann taught us. So from, this one was an anniversary of a low, and, 13 years, that's a big cycle. And then 3 years. So November is a key month for the XRT for some reason. And if it sells off, you might be looking at the anniversary of this March low, 2020 low. Now, I'm not saying it has to go all the way down here. It might not get that low. It might bottom here or here. It might even bottom here. But we do, some sort of pullback is likely. And if you're a fan of Elliott wave, you can sort of imagine A, B, C would take you down here somewhere. So if this swing, the initial swing move down is of equal length to this swing down, it probably should be close to 36, which is also again retracement. So I like it. This is about 49, 50 points down, and then 49 or 50 points down here would take you down here somewhere. So without getting too specific about a price target, don't focus on price. We know it's going to be a correction. And if we're wrong, if you close above 84.80, hey, no harm, no foul. Get out of your short position, cover it quickly because maybe it goes to new highs. So that could happen. All we're arguing is that the cycles, 36-month cycle is a good cycle. It probably is a lower high. We're probably setting up for a move down, especially given that we rejected this Gann retracement at 84.80. So that's what we're looking at. If you close below 75.05, you see how it found support here? When that support gives way, a lot of people will be watching. Even if they're not doing Gann, they'll kind of visualize that, hey, there's support right here. And then you'll get a waterfall decline. And the other level to watch, the 5/8 retracement gave you the exact low from the initial swing move down. When that goes, people will really start to freak out. Again, even if someone's not doing Gann, they're going to know because this former low is important. But all the more important because it's a 5/8 retracement and a 1x2 line. So pretty special. Now, if you're interested, I'm doing 0.5 units. What that means is that if we're looking at a monthly time frame, what we're looking at, this slope of this red line, the 1x1, it moves up at a rate of 0.5 points per month. And the 1x2 by definition would be half of that. It's actually degrees of 26.5, or half of this, which means that it would be 0.25 points per month. So that combined with the Gann retracement at 55.55, it's pretty cool. You're taking out two Gann retracements, two Gann support levels in one go. The 1x2 line and the 5/8 retracement. If you do that, I think you're going down here. Now, maybe you could argue it stops here, but I think you'll go down and retest the low. And if you're doing the math, 104 minus 26, do the math, it works out to a 75% correction from the high, which is kind of reasonable. Given that people are spending all their money before Christmas, they'll have nothing left for the new year. They'll have to start paying down debt, and the banks will help them out by charging them 20 or 30% interest on the balance of their credit cards. So that's all good stuff for the banks, not so good for consumers who are digging themselves into a hole. And guess what? Then they'll stop spending and retail will go down it'll just be like a waterfall decline. So I think you're getting ready to go down. I think the 36-month cycle is real. For the same reason, November of 2021 was important because it was a low back here. You know, if you find a month when the cycle, when a market turns, whether it's a high or low, doesn't matter. If a market is turning in a particular month, then you have to follow that month every time it comes due. So November is a big month. March is a big month. I'm not saying it has to bottom in March, but you do have a 60-month cycle due in March. So, hey, 5 years low to low, that would be pretty cool, wouldn't it? A lot of symmetry. That's what we're looking for, symmetry. Doesn't guarantee that you'll get down to 26.29, but if you did get down there and you found support sometime in the month of March, and then it starts bouncing, at the very least, you should cover your short position and maybe think about going long. So it's not so much about forecasting, it's about knowing what to look for down the road, which will give you a trading opportunity. I hope this has been helpful. If you like the video, give us a like, follow us on social media, and register to the website. You'll get a couple of free reports, and if you really like it, think about subscribing. Beats a poke in the eye with a sharp stick.